All right, so, everyone's always asking about the best place to put our money right, especially with everything going on in the markets right now.
Yeah, that's definitely a big question for a lot of folks these days.
And it's tough, right?
Yeah.
Because there's no easy answer. There's always the classic debate of, real estate versus gold.
Right, exactly.
And trying to figure out, if you're looking ahead, let's say 3 years out, where's the smarter bet? Well, in this deep dive, we're going to tackle that very question.
We're going to start by focusing on some recent expert opinions specifically about gold to really get a sense of where things might be headed.
Yeah, so we came across a really interesting article this morning, March 31st, 2025, from Kitco News.
Oh, yeah, Kitco News.
Those guys know their stuff when it comes to precious metals.
Yeah.
They really do some great in-depth analysis and reporting. So, when they point out something significant, it's worth paying attention.
Absolutely.
And the headline here is pretty eye-catching. Morgan Stanley, Citi, and Goldman Sachs all grow more bullish on gold as prices pierce $3,100.
So when you see those big names all seemingly moving in the same direction, that's definitely something to take note of.
For sure. So let's break this down a bit. This article is talking about a growing bullishness from these major institutions towards gold, especially now that it's gone above that $3,100 mark. So it's not like they were negative before, but it seems like their conviction is getting stronger.
Exactly. And it's interesting because they're not just jumping on the bandwagon because of the price movement. There are some underlying reasons for this increased optimism.
Oh, really? So what are some of the specific things that are making them so bullish?
Well, for example, the article highlights that Morgan Stanley is pointing to a couple of key factors. They're worried about persistent inflation. Those pressures just don't seem to be letting up.
Yeah, inflation's been a real headache for everyone.
Totally. And they're also concerned about a potential weakening of the U.S. dollar.
Right, makes sense.
So they're basically saying that gold, with its traditional role as an inflation hedge and a safe haven asset, well, it's becoming even more attractive in this kind of environment.
Makes sense. Gold's always been seen as that kind of steady port in the storm.
Exactly. And then you've got Citi. They've actually raised their near-term price target for gold, which is pretty significant.
So they're putting their money where their mouth is, so to speak.
Yeah, they're really leaning into it, and they're citing strong investment demand as one of the reasons for this. Plus the whole geopolitical uncertainty thing. The world's a pretty volatile place right now.
Yeah, no kidding. There's a lot going on out there.
Right, so gold's looking pretty good to a lot of investors as a way to kind of mitigate some of that risk.
I see. So it's not just one single factor, but a whole bunch of things coming together that are pushing these institutions towards a more positive outlook on gold.
Exactly. It's like a perfect storm brewing.
And it's interesting because the author of this article, Ernest Hoffman, he's not just some random blogger. He's got 15 years of experience in financial journalism. He's the crypto and market reporter for Kitco, so he really knows his stuff.
Oh, yeah. Hoffman's definitely plugged into the financial world. He's got those connections and insights that make his analysis really valuable.
Right. And the fact that he's seeing this kind of alignment across these major players, it makes you wonder, right? If these giants of finance are feeling bullish about gold, what does that mean for the rest of the market?
That's the million-dollar question, isn't it?
And, I know we have a lot of listeners who are thinking about their own investment strategies, trying to figure out where to put their money. So how does this whole gold situation factor into those decisions, especially if someone's considering real estate as an option?
Yeah, that's a crucial point to consider. And of course, we always have to add the disclaimer here. The article makes it very clear that these are just the views of the author based on his reporting of these institutions' opinions. This is all for informational purposes. It's not financial advice.
Right. Everyone's situation is different, and it's important to do your own research.
Absolutely. But the key takeaway here is that these are some pretty influential voices in the financial world, and they're sending a pretty clear signal about their outlook on gold.
Right. So if we take a step back and think about the bigger picture, this whole bullish sentiment on gold, it kind of suggests that there's a sense of maybe increased risk or uncertainty out there in the market, right? Because gold is often seen as a safe haven asset.
Exactly. When things start to feel a little shaky, people tend to flock towards gold. It's like the financial equivalent of comfort food.
I like that analogy. So if that's the case, then what does that mean for other assets like real estate? I mean, if everyone's feeling a little nervous and turning to gold, is that a sign that real estate might not be the best bet right now?
Well, it's not necessarily that black and white. It's more about understanding the forces at play here and how they might impact different asset classes.
Right. So, for example, if inflation is a real concern, like Morgan Stanley is suggesting, how does that impact both gold and real estate? On the one hand, gold might look more attractive as a hedge against inflation, but on the other hand, rising inflation could make it harder for people to afford mortgages, or could impact rental income and property values.
Precisely. It's all interconnected, and it's about looking at the whole picture, not just focusing on one piece of the puzzle.
Right. So we're not saying that real estate is a bad investment or anything like that. We're just saying that it's important to understand these broader trends and how they might influence different parts of the market.
Exactly. And that's why we're starting with this deep dive on gold. It's like laying the groundwork for a bigger conversation about asset allocation and how to navigate this complex investment landscape.
And I know we're focusing specifically on gold today, but we'll definitely be doing more deep dives on other asset classes like real estate in the future. So stay tuned for that.
Absolutely. There's a lot more to explore.
So to wrap things up for our listeners today, the big takeaway is this. Major financial institutions are feeling increasingly bullish on gold. It's gone above $3,100, and these experts are seeing it as a potentially good bet in the current economic climate, with concerns about inflation, dollar weakness, and all the geopolitical uncertainty out there.
And that's based on some pretty solid reporting from Kitco News and their expert Ernest Hoffman. So this gives you a really good starting point as you're thinking about your own investment strategy over the next few years.
And especially as you weigh real estate against gold or other options, it's crucial to factor in these shifting perspectives on safe haven assets like gold.
Absolutely, knowledge is power.
So here's a final thought for you to consider as you go about your day. Given this growing bullishness on gold, what would need to happen in the real estate market to make it just as attractive an investment over the next 3 years? What kind of factors or changes would need to occur to make you feel like, okay, real estate's got the edge over gold right now?
It's a really thought-provoking question, and there's no right or wrong answer. It all comes down to your individual circumstances, your financial goals, your risk tolerance, and your overall assessment of the market.
So we encourage you to keep exploring, to do your own research, and to consider all the different angles before making any decisions. This deep dive is just the beginning of the conversation.
And we'll be here to help you navigate those conversations every step of the way.
Thanks for joining us for this deep dive. We'll see you next time.